So why do business owners get so many tax breaks while employees tend to pay more taxes than, say, a business owner? We'll go through those details in a moment. My name is Merrill Taylor. I am a CPA. I specialize in working with business owners to help them save money on taxes. We generally help business owners save anywhere from $10,000 per year up to hundreds of thousands of dollars per year using niche tax strategies. So now business owners fall into a very specific type of an area within the tax law. Because business owners can basically write off expenses against their income, whereas employees are not able to do that. As we sit here in 2025, the 2017 Tax Cuts and Jobs Act eliminated the deduction for employee expenses. So if you as an employee drive your car somewhere for work and your employer does not reimburse you for that, there is no place on the tax return to deduct that. It used to be deductible as an itemized deduction on the personal tax return, but the 2017 Tax Cuts and Jobs Act axed that deduction, completely got rid of it, so you can't even put that on as an itemized deduction anymore because the lines that it used to be on there on that form are now gone. So they've lost that deduction. But if you're a business owner, then you would fill out your business form, whether that be an S corporation or a partnership or a sole proprietor or even a C corporation. Is what happens as a business owner, you report your total income, and then there's a bunch of lines where you can report expenses. One of those lines is automobile expenses. And so you as a business owner, if you drive your car for business, you can then put that deduction on your tax return and get a deduction for it. And as what happens is, let's take an example. Let's say that there's an employee that makes $100,000 and there is a business owner that makes $100,000. And both employee and the business owner drive 10,000 miles a year for business. And let's just make it easy. Let's say that the business deduction is 70 cents per mile. The employee, when they drive 10,000 miles for business and the employer doesn't reimburse them, they get no deduction. So they're taxed on the full $100,000 of income. They have to pay tax on it. And then their business mileage, the gas and the maintenance and the wear and tear and all that sort of stuff on their car, they have to pay for that out of their own pocket and they get zero tax benefit for it. Whereas the business owner, they get paid the same $100,000, but now they have a 10,000 miles they drove for business. They now have a line on their tax return where they can take 10,000 miles times 70 cents per mile, in this case, for the tax deduction. So they're going to get a $7,000 deduction for that business mileage. So now they're going to take $100,000 minus $7,000, and they are taxed on the net of that. So that would be $93,000 that they get taxed on. So here you have the employee taxed on $100,000, business owner taxed on $93,000, and now they're paying less tax and saving themselves in that way. So that's the difference between employee and business owner, is that business owners have an area where they can deduct their expenses, whereas employees do not. And when you're a business owner, there's a lot of things that you pay for personally that can also be used for business. For example, a business owner generally needs a cell phone to conduct business. So at least a portion of that cell phone that's used for business can now be deducted, whereas an employee that also uses a cell phone for business has no place to deduct that. So you take a business owner, they're going to be deducting mileage, they're going to be deducting at least part of their cell phone. Maybe they've got some travel expenses. Maybe they have some meals, some business meals that they're doing. You can look at all these sort of things and see how they're linked and related to their business. They can get a deduction. Maybe they can come up with, say, $15,000 of deductions during the year. And there's a special provision in the tax law that says business owners can also get a qualified business income deduction, which can be up to another 20% of their income. So this could be a scenario where a W-2, an employee, gets taxed on the full $100,000 and then they have to pay all their expenses after they pay taxes. Whereas a business owner, let's say all these deductions, let's say they could get their taxes, their income down to like $70,000. So all of their expenses come out before taxes, and then they pay taxes on the smaller amount. So that's the difference between being an employee versus being a business owner. Now, of course, there's a lot more hassle and challenges and difficulties being a business owner. You're subject to a lot more expenses and a lot more risk and a lot more other sorts of things that way. So the reward for them paying less tax comes from taking more risk. Sometimes being an employee, you don't take on as much risk, so maybe paying more taxes is a little better. So people that are considering going in and starting a business, that's one thing to consider, is how much risk that they're willing to take on for the reward. Some people are better off just being the employee, paying more in tax, but having a better quality of life maybe that way. Whereas some people are more happy doing the employee route or doing the business owner route, paying less taxes but taking more risk. And so that's kind of the breakdown there. This is a channel where we talk about taxes and tax updates. And so if you'd like to get those updates on a regular basis, you can go to taxtutor.com and sign up for our weekly newsletter.